Hello everyone, welcome to AdiTrade. Now today we're going to be seeing the Dow theory in the series of videos. So far we have covered candlestick patterns, support, resistance, trend line. Now we are looking into Dow theory. See, what is Dow theory is nothing but just like a statement or a theory on which we can determine if the market is in an uptrend or a downtrend. I'll be explaining that. Now what is Dow theory is nothing but a person called Charles H. Dow. He's the one who invented this Dow theory in the 1900s, and he was the founder of Dow Jones and Company. But a lot of his works didn't get published. Later on, it was these guys, William, Robert, and George, who were the one who organized and started spreading his theory after his death. Everything about Dow theory. So we are going to see what is this Dow theory, what it states, and how we can apply it on the charts, and how to see it on the charts. I'll be showing you that. Obviously, if you want in-depth details on Charles H. Dow, you can go to the Wikipedia page and read the entire history. It's always good to have the complete information. But what exactly this Dow theory states, I'll be explaining that, and we'll be making use of this Dow theory in, say, for intraday, positional trading, equity, daily, weekly, monthly chart, everything. On all charts we will be having a look at this. This will be the basis of which we do our analysis, whether the market is in an uptrend or a downtrend. And this theory can be applied even in stocks, equity, anything that has a candlestick chart representation. We can go ahead and use this Dow theory. Now what this Dow theory states is, if the market is in an uptrend, this is how the market will most likely move. That is, it will make a high, then it will come down, make a low, then again it will go up and make a higher high. Now what does this higher high mean? Means it is higher than the previous high, so we call it higher high. Then again it will make a low, and it will be higher than the previous low. See, this low and this low. Now in terms of, if you see exactly in terms of numbers, right? Now say you see the right hand side where the chart it's marking, this is the Banknifty weekly chart. Okay, say we are at 13,250. On the right hand side over here you can see the price line, right? Say we are at 13,250. Let me put the labeling, it will be much easier to understand. So at this point Bank Nifty was at 13,300. Then Bank Nifty went up and made a high at this point. Okay, so we're going to mark that point over here. That high is 21,778. Then we made a low. So I'm going to use this pointer. This is nothing but what you get in this diagram, where over here you can choose this price label. So whichever point you choose, right, it will plot the price randomly on the chart. Wherever you want you can do it. Then again the price made a high. Coming back to our diagram, again the price made a high. I'm going to spot this level, and then we made a low. So this uptrend, what has happened is, the price from 13,300 went to 21,700. It made a high. Then it made a low of 18,750. Then again it made a high of 27,900, which is higher than the previous high. So we call it as higher high. And after making a higher high, some retracement will be there, right? So there was a small pullback and it came down until 24,308. So, but this low is a higher value compared to this low, so we refer it as higher high, higher low, right? We'll be seeing the same example on the charts. We'll just see even the downtrend and then go to the charts. Hope this was clear. We are making a high, so the next high should be a higher high. See, obviously on the charts, when you see, it won't be like a single straight line. You know how the chart flows, right? We'll be showing that on the charts, how you can see it on different time frames. Now these levels what I've taken, right, 27, 13, just randomly based on the chart, just for the explanation sake. Now the same thing we say the market, either indices, Nifty, Bank Nifty, or a stock is in downtrend. if we make a low and then a high, and again when we fall it should be a lower low, means this value should be higher than this value and this value should be lower than this value, right? And again when we make a high, this high should be lower than this high, so we are making a higher low and lower lows, then we refer it as the market is in a downtrend. Obviously there will be many points. For example, I've just taken 2 points, two higher lows and high and higher low and low and lower low. Now if we mark these points, right, now this, when the market came down here, we made a low of, okay, I'm going to keep it over here. See, we made a low of 25,500, right? I'm just considering the whole number. Then again the market went high, we made a high of 28,500, or round figure consider 28,600. Then the market fell again, and at this point it started going higher, so it made a lower low. Why we say lower low? You can see it in this point. See, this point was 18,700, right? 18,970. At this low the bank nifty was at 25,500. So compared to this value is a lower value, so we know it is making a lower low. Now again after making this lower low, it retraced a little bit on the upside, making a higher low. Now what is the point over here? Now what is the price over here? For this higher low it is at 22,400. In this side the price was at 28,600, right? So this high is lower to this high, so we refer it as higher low. So this is how we determine if the market is in an uptrend or a downtrend based on the Dow theory, using this higher lows, lower lows for a downtrend, or higher highs and higher lows for the uptrend. Now we'll see some examples on the chart. I'll get rid of all this price lines, so just looking at the chart we can just revise once before going on to the chart. Just looking at this diagram, it's not at all complex, right? The Dow theory is just like any other theory that we have studied in our school and college days. See, in an uptrend we consider the stock indices or any instrument is in an uptrend if we make a high, a low and a higher high, because it is higher than the previous high, then a low which is higher than the previous low, we call it higher low, then we say the market, whatever the instrument, is in the uptrend. For the downtrend, say we make a low, then we make a high, then we start making lower lows and higher lows, we refer the market is in a downtrend. Now I'm just going to turn on the price action and come to the chart. Let's go with the daily chart first. Now on the chart, how can we identify this higher lows and lower lows, right? It's all there in the charts. It's not complex. Now let's consider from this point. This point was almost like a market being restarted at Bank Nifty coming down to 16,000. This was the COVID fall. When this whole COVID news came, we had this huge fall. Then after that, did the market continue in an uptrend or a downtrend? We are going to see that. Okay, I just want to get these. So if it's already there, it will be helpful. Let's come back to our diagram. See, I'm going to be copy pasting this so that I don't have to type again, so don't consider look into this until I place it. So we had this what do you say, this COVID fall, right? After that, see what happened in the market. Let's plot it with this path so it will be easier to understand. See, the market went high. Let me choose a neutral color. See, the market went high from this point, right? The market went high and it came down. Fine. So now this low is, I'm going to mark the point. It is at 16,176. So the market went high, right? I'll mark that high point. What is the high point? 22,000, around 22,200. Then again when we came low, did we break this previous low? No, right? What was the point over here? I think if I minimize this, it will be better. Yeah. See, we went up, we came down, but when we came down, did we break this previous low? No, right? So what is the point? What is the price line over here? Price is 17,260, exactly 1,000 points above. So from this point, the low point, we went up, we came down. When we came down, we didn't break the previous low. So this itself is showing we made a higher low, right? Let me remove this. So we made a high, then we made, at this point we made a higher low. So I'm going to mark that. Now why is this a higher low? See, this was one low. Okay, see, the market could have fallen after this. I'm not saying the market could not have fallen, the market could have fallen, but when we got that confirmation that okay, we might tend to go in an uptrend, is when we made this higher low. When again this fall was happening, right? Nobody could have predicted that market is going to bounce off from here. When this fall was happening, it did look like we were going to come and probably even break this low and go down. But from here, when this candle, we got this reversal, right? When we made this higher low, that's when everybody had a feeling, and anybody who's doing technical analysis would have understood that we have made a higher low, so the market could go in an uptrend. So then again the market went up, came down. On a daily time frame, if you see, obviously there will be some noise like this which we can't do anything. Now the market went over here, okay, use the brush. See, again the market went up, it made a lower high, okay, and when it came down, did it break this low? We are still in this higher low, right? We didn't break any low. Then what happened? All the way we made a new high. Okay, after that we got a pretty significant fall, correct? So again at this point we have made a higher high, and this point we have made a higher low. And again over here, see, when we came down, see, until this reversal comes, we won't know if it is a higher low, obviously, right? We won't know exactly at this point we will reverse, but later on in the charts, like later on in the videos, you will see there are other tools that we can use to identify the amount of retracement also. So when we fell here and started reversing, so we made a new higher low. So here itself we have a perfect Dow theory. This itself, see, even at this point, a lot of people on TV and other places were telling the market is going to fall again, it's a downtrend, we are going to break this low, all that is going to happen. But at this point itself, the market was in a perfectly bullish trend. Now how much bullish, like whether it will be like a continuous bull, impulsive bullish, or like a sideways bullish, that there are other things to tell. This Dow theory won't tell. The Dow theory only tells the trend in the market, right? Now let me get rid of these lines if it is a little confusing. Fine, we made a high, higher low, higher high, higher low. Then see, we started getting nice. Then we all the way went over here, made a high. Then the next significant low was here, higher low. Then again we made a higher high, which is higher than all these highs. Again in this fall, right, a lot of people were telling we are going to reverse for sure. This was, I think, during just before the budget, we are going to again crash. Again, this itself was an indication that the budget day we could have shot up, we are going to shoot up nicely, because when we fell down, we didn't break this low. Let me just clear everything, remove the drawing, and put, see, we had made this low. When we made this higher high and came down, if this low had broken, for sure we would have got a confirmation that probably even the budget will be something wrong or like bad, or the market would have crashed. But when this made a higher low, this itself was indicating that probably we can start going up and make a new higher high from here. So this is how we identify. This example I've shown on a daily chart. This is how we identify an uptrend. See, right now what is happening in Banknifty, until here we were making a higher high, higher low, higher high, higher low. So this low is a pretty crucial point at this Banknifty. Not sure when everybody will watch this video, but I'm recording around March 7th. If this low breaks, right, we are still in the uptrend on a longer time frame. If you see on daily chart, we are as per Dow theory, we are still in an uptrend. That uptrend might change if this low is broken. We might start making, then we will have high, low, lower high, lower lows. We'll start making lower lows, right? Now I'll just shift to a 1 hour chart just to show the downtrend, how we move in a downtrend based on Dow theory. See, recently we made this high, right? We made a high of 39,400. After that, the market has been in a downtrend. As the time frame, you come lower in the time frame, the trend also remains for shorter, right? So we made one high of 39,400. Then we made a low of, what was the price here, 37,370. Then again we made a high. This itself showed that the market is in a bearish trend. There are other things that we see, divergence and all, we'll be seeing that later. See, it didn't break the previous high. If it had broken this high, probably we would have been bullish. It made a lower high. This itself indicated that the trend is changing on an hourly basis. We made a lower high. This, why lower high? This is 39,100. This is 39,400. Then when we fell, we made a new lower low. We broke this low and came down. Again when we went up, we made a lower high. Again over here, it looked like we made a higher high, higher low, but the high was still a lower high. Then we got this dip, we made a lower low, lower high. Again now we have made a lower low, and it looks like we have made a lower high. And if this low breaks, we could make a new lower low again. So this way you will be able to identify the trend in the market. But say if this low doesn't break, right? Now say if this low holds, what was the previous, if this low holds, when the market will change? If this low holds and say this high is taken out, right, 35,800, then we might start seeing the market kind of reversing in an uptrend, right? But if this low breaks, again we will be making a new lower low. Now let me show you the change of trend. Now consider this 1 hour chart, same Banknifty itself. See, over here we were in an uptrend, and this we were in a downtrend. Now let's analyze this using the Dow theory. Say consider this as a low point on the left hand side at the extreme bottom in the chart. See, we started making higher lows and higher highs. Compared to this side was higher, this is a higher low, this is a higher high, higher low, higher high. So this way we came until this point. So even at this point we don't know if the market is still in an uptrend or a downtrend. but we made a lower high and then we got this dip and made a lower low compared to this low. So this itself indicated that there could be some, since we have made a new low, there could be some downtrend in the market. The same thing happened. We went up, we made a lower high compared to this high and started falling. All are higher lows and lower lows. So this is the way Dow theory works, and this is how we will be using. As we go, we'll be seeing even charts on 5 minutes, what kind of follow the Dow theory. There's so many examples when you see, right, the intraday basis, when you see whether the market is in a downtrending for the day or an uptrend. Now consider any chart you take, you see on a 5-minute chart, when we start falling, it will be making lower highs, lower lows. The moment we break that previous high, right, the market kind of shoots up on the higher side. So this Dow theory is the basis on which we see if the market is in an uptrend or a downtrend, and hope this was helpful. Next we will be seeing chart patterns. This will be a little interesting. Then all the other important topics and hardcore topics will start.